The silver price is waking up now, although it looks like it's waking up now. And this here is my preferred movement. Could we go lower from here, go into the 50s? Sure, you always have to have an alternate view. This is my bias for the moment. We'll unpack this in just a second. If you're watching this on the replay, use the time codes below to go to your favorite part. But if you're watching live, dang, geez, man and lady, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main, going out live on YouTube, on X, apparently, on Facebook as well. Again, use the time codes. It's very easy, but if you're watching live, you do get to enjoy everything, including the synchronized slurp. That's where you grab a tasty beverage. I've got my tasty beverage. We slurp them synchronously together. It is the slurp heard around the world. Whatever you are, whatever you're doing, drop it, grab it, slurp it. That's my new slogan. No, that is not my new slogan for obvious reasons, but let's slurp our tasty beverages. Ready? 3, 2, 1, go. Drop it, grab it, slurp it. Oh, thank you, construction workers. Thanks. Right outside the window. That's great. Who am I? Joe Main. I've been a stacker of precious metals since 2010. I've been into crypto since 2013. I am an avid investor. I've learned the foundations of technical analysis principles, etc. I'm doing the year-long course at Mastering the Markets and, all that stuff too. Let's just get through some shout-outs, then we'll go to that silver thing. Then we'll take your chart requests today as well. I do give preference to super chats. Super chats, get the preference, give me money. It helps the show and helps you. Daisy just says, sell. One word, sell. One comment. Is it time to buy? Well, come back to that question. Chris Sino says it's always a good time to buy. I do agree, Sino. Oh, Niels Hunt Dynasty is here. Good morning, my friend. Good to see you. Yes, buy silver, platinum, and crystallized osmium. That is your calling card. It's a copy and paste job. Good morning, Joe. Slurpy, slurpy. Am I going live on X right now? Bay when you can. You mean buy when you can, but that's all right. Good morning, everyone. Let's have a quick little look. I'm going to get you please and thanks. Can you head over to x.com/it's Joe Main for me? Just let me know. Am I live on here? In particular, am I shining through? No, I'm not. Once again, it's not happening, but yeah, over there, you can see it right there. It's over there, but it's not coming up on my page. That's really weird and very, very annoying. Once again, use the time codes below. We'll go straight to that silver talk. Yes, indeed, X Live, yeah, but just not showing on the page, which is really frustrating for me. Don't know why that is happening. Cool. What do you need to know? The show is brought to you by Perth Bullion Exchange, perthbullion.com.au, the greatest bullion dealer in all of Australia. How would I know? I worked for 3 of the big boys over 12 years. Also, Mastering the Markets, masteringthemarkets.com. Did you know that today is the opening day from midday today, Australian Eastern Daylight Savings Time, roughly, I think. The April intake course enrollments open for the people on the wait list. So it's priority access. Talk to me, send me an email, joe.main@masteringthemarkets.com. You can get in before it's open to the public. You've got about a week to do so before they're potentially all gone. All the spots. Good morning, Stackers, says Caroline. Great to see you again, Caroline. I should have you on the show. Let's talk. Send me an email. You can send me email there, that little thing up the top there. What else do you need to? Oh, of course, Stormrake, stormrake.com, full service cryptocurrency brokerage. Get 2% brokerage fees instead of 3% for the life of the account when you sign up with my thing. I'll put that somewhere. Here is silver on the something time frame. Daily time frame, priced in USD, $77.20. We've had a lovely little move. Silver looks like it might be waking up. So that is a lovely 8.8% close. We closed for the market's closed. We're opening in about another 20 minutes or so. We'll take a look at what happens when the market opens. 7.5% for the day. That ain't bad. Okay, so let's unpack that, and I'll also unpack this as well. Let's go into the 4 hour. And again, taking your chart requests as well. So we have been, and use the super chats for chart requests because they get the preference. I did tell everyone that I bought silver, and I bought a whole bunch of it. Paper, physically backed paper silver, that is. I've got my physical silver, which shall not leave my cold dead hands until like 2030, 2032, that kind of area. Obviously, the big move up into that $120 mark. We noted all the way back here, based on what I've been learning from Mastering the Markets, doing the year-long program, and also keeping on top of being a part of their community, the academy. I'm a staff member as well. But we were all talking about up here, the break of market structure on the 1 hour time frame. We were noticing bearish divergence up in here. Then we made a lower low. We made a lower high, and then you broke right there at about $106, $107. That was the death knell for the shorter term on the 1 hour time frame. And then after that, look, it was just kind of creeping, and then it broke there real damn quick. Okay, and that's because it broke market structure on the 1 hour time frame. This is all the stuff you learn from Mastering the Markets just within the first 10 weeks. Okay, term 1 of the year long, you learn all this stuff. Okay, break of market structure on the 1 hour off of bearish divergence, and then all the way down. Now, I had said that I thought we'd get down to potentially about $60. Now, we had what happens with movements down after such a large move up. You normally get three main waves down, like an A, B, C, that kind of thing. I was suggesting watch out for $60. In particular, we didn't get close. We didn't get there, but we got damn close. We're $4 off. I'm going to call that close enough for Jazz. Then on the 4 hour time frame, this was happening where you have this support right here, and that support got broken through, but look where in that zone it was. So look at this: buyers, quick wick down. We love quick wicks down. Quick wicks down say buyers are more so in control of the market, and we closed above that area. So there. We were saying, and I have been saying, that as long as you stay around around about that $70 mark, cool, great, that's fine, because that's support is being held, fine, that quick wick down, and preferably you didn't want to break through. Technically, I think I was saying 71, because that's that close there on the 4 hour. We had this move up to here, bearish divergence, and then we had that move down. I know I'm giving you sort of the weather report, but you need to see this in order for me to tell you what I think might be coming later on. That to me looks like a right here, a three-wave move down. So 1, 2, 3, A, B, 1, 2, 3, 4, 5, A, B, C. This is on a mini wave, and then just here, you know how we talk about the zag zone? We talk about the expected support range, and the expected support range after you have a move, okay, is somewhere between 1/3 to 2/3 of the move, and it's usually in this zone here. Right within there is where you can tend to find a major support in a downtrend, or you flip it around and it's major resistance if you're doing it the other way. Cool. So where did we find major support? Bang, right there, bang on it, like perfect. At the 0.618 from this low and this high, that was at $71.80, right? And what do I always talk about? If you break down into this area and you find support and then you start heading back out of it, that's really bullish, okay? It's very bullish, because it's saying, okay, people found that roughly a 62% discount from this high, okay, is an absolute bargain. And then if it starts getting back through here, it's like, well, that's out of that normal zone, okay? So as long as we stay above here, it's looking really good. Stay above $77, great. I will say the opposite if we do the following. And this could happen. If you do this, comes down into this area, breaks back out of here, but starts falling back through there, you're like, oh, shit. That's the technical term. Oh, shit. Why were they happy to buy here pretty quickly? Okay, then they're not buying there again. What's going on with the psychology of the market? So if you fall back through here, 72, I'm going to say, yeah, we're possibly looking down into the sort of the 50s potentially. We'll talk about that if we get there, but so far looking very positive, right? on the daily we closed it as well on the logarithmic and on the we didn't do it on the linear, but we did do it on the logarithmic. So that's quite positive to me. That's a nice turnaround. So that says to me on the daily that this now is what we're more likely looking at. Now, I originally got this idea from David Bird, head of Mastering the Markets, masteringthemarkets.com, watching his weekly market scans and all that. But I've also been learning, I'm in my third week this week, Unit 3 of the Mastering the Markets year-long course, which is Term 3, and we're learning Elliott wave theory. Okay, so this looks like to be the most likely setup at this stage. Could it break down here? If you get down again through that $71, $72 there, and then you can say, okay, maybe we haven't finished and we do, if it ticks over here and starts doing that, yeah, okay, maybe we're getting into the kind of the 50s. Sure. At this stage, though, it's looking like this is more likely. So let me explain this very quickly. That was very crack that whip. Something like this is what happened previous. So it's like a 1, 2, 3, 4, 5. Markets move in 5 waves normally. 5 waves up or 5 waves down, depending on the primary, on the trend that you're going. 1, 2, 3, 4, 5. Then what we saw was some bearish divergence between the third and the fifth, which is here on the relative strength index. So this is where you start seeing the price is still going up, but momentum is getting lost. Okay, losing momentum, right? So from here to here, you'll start to see bearish divergence where the price is doing one thing, but the indicators are doing a different thing. Okay, so that's that bearish divergence. That's how we knew getting close. And I've been talking about it for ages. Okay, around about that kind of, we were getting toppy from about 95. When we got to about here, I said, it's just starting to look extended now. Anywhere between 95 to like early 100s, that's where the momentum is going to start getting lost. And then we found it there. Again, we talked about that 1 hour thing up in here when we zoom into the 1 hour, but that's what we're looking at. That 1, 2, 3, 4, 5. Then after that, you get an ABC correction. What I think it is, that's it. 1, A, B, C correction. Okay, so that's 1, 2, 3, 4, 5, A, B, C. And now I personally think we are, until proven otherwise, I think we're doing the next move up. Okay, so I think we're in the start of a 5-wave impulse. Could be completely wrong. I am, again, just starting this Elliott wave stuff. I've got all my fundamental analysis, but I'm learning Elliott wave. This is complementary to all the the fundamental stuff that I've learned. But yeah, it looks like that. Wave 1, wave 2. Now wave 2 can come back into that general area that we talk about. Perfect at that $72 level. Now I think we're onwards and upwards from here. I'll say 80% sure at this stage. What will seal the deal for me for sure is if you break up through here. That's beautiful. Right there at $86 roughly. And let me show you on the 4 hour just so it's a little bit less blocky. And again, I'm taking your chart requests, get them in. Preferences go to super chats. So what I think it is that. So 1, 2, we came down into there. Perfect, I think. And then what this is a non-failure swing. So what you've done here is there's your lower, what am I doing? You made your, obviously a lower low, a lower high, another lower low. So that's a bearish change of market structure. Now we've gone a lower high, higher low. So that's the first sign. You're making a higher low. Great. Above that support level right there. Even better. Fantastic. That matches up with there. If you do the following, higher low, higher high, anywhere, like 1 cent above there. And now technically you've made a higher high on the 4 hour. You would have made a higher high on the daily time frame as well. I know a lot of this is looking a little bit blocky, but hopefully you can go with me. You can see it, and that's perfect. So that would be setting up for me. Okay, now number go up, number go down, but I think something like that. Then you'll get the wave 3, then you get a wave 4 pullback, and then the wave 5, which takes you into brand new all-time high territory for silver, then the thing becomes, watch out from here. I did mention this previously. We could go to 150, 130 to 150 roughly. I actually said, I think it was about 125. No, how about 130 to 150? Okay, I made the case that silver could get to 150 by April. Okay, that was a previous video that I did. That is true. You just have to be careful from there. So I do think we're on this pathway, more so on this pathway. Again, 80% sure at this stage. Cracking that $86 mark would seal the deal for me. I'm saying, okay, yeah, we're doing that now. When you get to a new all-time high, be very, very careful. I can just link you to my previous video, but the short answer is this here. So this 1, 2, 3, 4, 5, all of this here is a larger move from here. So Elliott wave, I'll try and get rid of all that for you. Elliott wave is waves within waves, or phases within phases. Okay, so what that is, you, and where's the last one? There we go. That is all the following. That's all this. From, well, that's the 1, 2, 1, 2. We'll take it from here. 1, 2, 3, 4, 5. Okay, let's put it at your 130 like I said before. I think I had like 130 to 150. Just pop it in the middle somewhere. Okay, that's that 1, 2, 3, 4. Now that 4 could, you can pop it here, pop it there, whatever. That, and then after that, that's when you get a larger, right? So that's 1, 2, 3, 4, 5, and that's of this. 1, 2, 3, and this is the kicker. This is where you need to be careful. If we start making new all-time highs by the end of April, like do that kind of thing there up into that 130 to 150, then you have to be careful. Then it's something like this when you can have the larger wave 4. Okay, and then I'll just put this there somewhere. So that's the 1, 2, 3. There's your mini 1, 2, 3, 1, 2, 3, 4, 5, all-time high, fakes you out, and then takes you back in here for a while. And that could be like 6 months, possibly longer. Okay, and then that's setting up for the whole, where are we? Pop it about there. That's setting it up for the whole huge wave 5 excess move into 2030, 2032, as we've been talking about before, which the price can go a hell of a lot higher than here, but just watch out for being faked out around about there. So that's what I'm I'm kind of betting on. I mean, I do have my positions in silver, but that's what I think happens at the moment. That move up into there, and then we'll get that larger move. Cool. That's why it looks like at the moment that silver is currently waking up while we've just bounced off that kind of 73 and we're above that $75, $77 mark. That's what I think. Yeah. Let's take some comments on that. Get your thoughts. I'll take your chart requests as well. The market is about to open in around about 9 minutes, so we'll see what silver does in about 9 minutes when it opens. Hopefully we get a little bit of dirt. We will see silver miners here in Australia have a bit of a push on the opening, of course. I do have a position now in a silver miner, and I'll tell you what that is in just a second. And I will ask you, if you are enjoying my stuff, if you've seen that since starting with me on the channel, since last year, if you've seen me grow and grow in terms of my market analysis, and have I been getting better? I believe I have. My portfolio is, up since I started mastering the markets courses. My superannuation is up to, I think I'm around about up 30-35% at the moment. It was not bad. Market go up and market go down. It's because it's all thanks to Mastering the Markets, masteringthemarkets.com. I'm doing their year-long comprehensive course, and today, at around about midday today, their April intake opens, and it starts with this, which is Tech 101. It's the 10-week course. Now, you can do this. It costs you $3,500 Australian dollars for the 10 weeks. What you get for 10 weeks, 10 topics. You get pre-recorded information like course material. Then you get 2 or 3 live sessions per week with the Mastering the Markets educators. It might be David, it could be Craig tapping, it could be Jamie or one of the other wonderful educators there. And you want to spend about 7 to 12 hours per week of commitment. That's inclusive of the course content plus your own self-study as well. Full access to the Mastering the Markets Academy, of course, as well, with all the other extracurricular stuff. Get a private chat with your group, your cohort. Anyway, short answer is you will learn the basics of technical analysis. If you just want to learn to be a better investor, that's fine. If you don't want to be a day trader, don't be a day trader. That's fine. But Dow Theory Principles and Technical Analysis Foundations teaches you all of those. You could be a day trader, you could be a swing trader, you could be a long-term investor. It doesn't matter. The principles are the same no matter what. It's just the time frame that is different. Okay? Technical Analysis Foundations work on the 1 minute chart, they work on the 1 year chart and everything in between. So you can choose what you want to be, but you need that fundamental education on Dow Theory Principles and Technical Analysis Foundations. Dow Theory Principles is Dow, Charles Dow. You heard of the Dow Industrial, the Dow Jones Industrial Average. Dow, Charles Dow, is the father of modern technical analysis, and you learn all those principles. Cool. 10 weeks, 10 topics, $3,500. It is absolutely the best thing that you can do for your financial education. Okay. You get free access at that time to the Mastering the Markets Academy. Of course, with all the other extracurricular stuff here, David's weekly market scans, Craig's market scans, all those guys that you've probably been following for a bit. Mastering the Markets, masteringthemarkets.com, and send me an email, joe.main@masteringthemarkets.com, and I'll get you enrolled and I'll tell you more about it. Cool. Let's see. Great question. Hey, Joe, if you complete Tech 101 course, great question. Tech 101 course, does it count as a credit towards the Tech 201 course? Yes, it does. Great. Whatever you paid for the Tech 101, if you're paying up front, it's $3,500. Then whenever, and this, you don't have to roll on straight away. So if you choose in a year's time, in 2 years' time, as far as I'm aware, 3 years' time, if you go, well, I did Tech 101, I want to upgrade and I want to do Tech 201, you'll have to start from, well, you could redo Unit 1, which is Tech 101, or you could just jump in from Term 2. You get credited that first amount. So if you paid $3,500, whatever the cost of the full year-long program is at the time that you're wanting to do it, that $3,500 is credited. So yes, you don't pay again to do the 10 weeks. So yes, correct. Let's see. PAAS earnings today, a good sign for silver. AG earnings tomorrow. Fantastic. That is really good. I can't help but feel the powers that be are setting another trap. You could be right. We are currently in the Chinese New Year close off of the Shanghai Exchange. There's less liquidity. And as I did say, with less liquidity is more volatility. So less liquidity, more volatility. And gee, what do you know? After the Shanghai, I think it's already closed now, then we saw that little pump. So yes, there is less liquidity in the market, meaning if people are more bullish, then you're going to see higher rises because, again, less liquidity to tamp the price down. Or if people were going, I'm going to try and manipulate the market down, they'd want to do it during this Chinese New Year time because, again, less liquidity. So the downward moves would be larger, right? So larger on the upside, larger on the downside, more volatile, okay? But I do love this setup. Looks like silver is waking up. Let's see what happens, I guess, when the Shanghai Exchange opens again. But I'm pretty positive on it. Let's see. I feel the bears have one last final trick up their sleeves. Yes, they could. If it gets into the 50s, you not buying? Oh, I am. Oh, yeah. Oh, yeah. US, Iran wars on the cards? Maybe. Metals will go up. If that does happen, then yes, that probably would. GMS, Gerald, good to see you, my friend. Holy OpenClaw. What happened with OpenClaw? I've heard of OpenClaw, but what happened with it? Did something specific happen with OpenClaw? All right. We're about to open the market in a couple of minutes. I'm also going to take your chart requests. Someone mentioned PAS earnings today, and I'll actually show you something that. Let me find it here, and I'll show you on my own chart as well. Give me a moment. You're watching Good Morning Stackers live here on YouTube, live on X, apparently, although it's not on my profile, but someone is watching, and live on YouTube as well. I'm just going to find a little post here from this morning. I like to big up my new boss, David Bird, head of Mastering the Markets, founder of. Let's share the screen here. So let's go here. We're talking about silver miners versus silver itself. This is David Bird, head of Mastering the Markets, my new boss. During the day, of course, founder and head of education at Mastering the Markets. You might know him as ASX Trader on YouTube. Right here, posted this morning. Will the best performing sector continue its leadership? Sorry, no, this is not the right one. This is the, hang on, where is it? No. Is that, no, it was pass. My apologies. Wasn't it pass versus something? Or did I not see that? Was that on, oh, hang on. It was pass versus, oh no, so we saw this. Okay, I can't show it to you, but I can show you what. I can show you what we were talking about privately. Let me go back here. Okay, so David was talking about silver miners, and in particular, how they've got a long ways to go versus the precious metal, okay, in particular. So I'll show you privately this is the same chart. I kind of did a similar mock-up to his chart. So talking about the silver miners to the physical silver. The market's just open. We'll take a look at that in just a second. Cool. So this is PAAS. So this is one of the biggest silver mining stocks producers in America. I think it's the largest. Okay, and this is plotted against the physical silver price. Now, what you'll note here, it's at very low level. It's at the lower end of its normal range. Cool. So that's when it's looking quite overvalued versus silver. This is when it's looking quite undervalued versus silver. Okay, now let's note a couple of things. Here is a point where it was very undervalued versus physical silver. That's in 2000. What happened in 2000? Here in 2015, 2016 is where it was even more undervalued versus physical silver. Gee, what was 2015, 2016? Let's go to the silver price on the monthly time frame. Let's have a look. I've got all my other stuff in here. The year 2000, in the year 2000, right there. There is around about the year 2000, okay? And here is the 2015, 2016 area. What is that? The bottom of the physical silver market, basically, and then we rip-roared, and then the bottom of the silver market in 2015, and then we have rip-roared. Of course, COVID happened. That was something that we couldn't see, blah, blah, blah. But yeah, from there, continued move higher. So when we go back to the pass and the silver, the silver miner, the largest silver miner in America, was highly undervalued versus silver at both of those times. So at both of those times, they had massive moves. Now, for about 4 years, PAAS massively outperformed silver. Now, it topped it around about 4 years into that new bull market for silver. And then it just started underperforming. Cool. But then in 2015, 2016, it started another massive run, took it to about 2020. Okay. And then since then, it has been underperforming the physical silver. But now look where we are again. We had that move there. And then we just had that huge move of silver up to 120, and it's taken us back below, and we're now back above. So the point is that silver miners, again, versus the physical silver, looking still incredibly highly undervalued at this stage. Even though silver has gone massively through the roof, okay, the miners have not been keeping up. And you don't have a top of the physical silver price until the miners massively outperform it. Cool. So here is just the general silver miners versus silver. And you can see very clearly we had that move back down. Remember we were talking about up in here, I don't have all my drawings on anymore, but we were talking about the fact that we got through, it was 1.27 it was right there. That was looking really good for me. That was through that area there. We got back through there. I'm like, okay, onwards and upwards. We had the onwards and upwards. We found resistance. Geez. Right there. And then silver just went hog wild to $120, and that saw that head down. We are back in this area now. So look at this. I think the silver miners are pretty damn due for a good run, okay, versus physical silver. Do you sell all your physical silver and move it into silver miners? No. But if you're looking to invest more into silver, maybe have a look at some of the silver miners, okay? You do you, buy physical, great. Don't hold it, don't own it, I get it. But I've just jumped into a small position into USL, one of the front runners here. Now that looks pretty high, doesn't it? Get rid of that. That looks pretty high. I mean, we've made a new all-time high recently. But because we're so undervalued in that ratio that I showed you, USL has got a long way to go, okay? A long, long way over the longer term. So I'm happy to hold USL for now, for the longer term, and I think I'm going to massively outperform the physical silver. Still got my physical silver, won't sell it till, much later, but I've got a small position in USL at the moment, so happy to hold that. Yeah. All right, market is opened. Let's go back to that. And I'll do that again. And then I'll taking some chart requests if you have any. Let's see. Market is opened. Let me check what. You can't see that. You can't see that either. Am I up or am I down? Okay. Let me have a quick little look here and I'll just check out my positions for the day. USL has jumped, which is fantastic. That's good to see. That's had a bit of a jump as well. And great. So let me just show you here. Anything I show you in here is something I'm currently in, unless I've gotten out of a couple of things and it hasn't updated. But I'm looking at these yellow flags right here when I find them. There we go. So of course, still in my BHP. That's up 1 point something cent for the day. Oh, BMN, Bannerman Energy. This is to do with uranium. This is in my superannuation, and happy to hold this for the longer term. It's looking great. Great. I am not in FLG. S32 I am in, but what I was going to show you was USL. Oh, I just showed you that. USL is now up a couple of percent for the day. No problem. I think we probably do something like this. That's 1, 2, pick a point. I don't care what it is. 3, 4, 5. I think we do something like that. Yeah, I think that's pretty much it. I don't have a lot in the market. What I actually have a lot in at the moment is shorting of this old bad boy. Let's take a quick look at the NASDAQ and see where we are. So this is the tech stocks. Okay, we've been talking about this. We now have technically... we're now in technically bear market territory on the daily time frame with NASDAQ. Okay, so I've taken a short position on that, and I'll show you what I did. We have right here lower low, lower high, and we just printed a lower low. Now we have headed back up, but technically we're in bearish market structure now on the daily time frame for the NASDAQ. Okay, not looking good at the moment. If you start creeping back above here, okay, then we'll say, all right, maybe little flash in the pan just there, freaks everyone out, and then starts heading onwards and upwards. And okay, great, sure. At the moment, be very, very, very careful if you own any tech stocks. I would be getting out of them at the moment and then see what it does. But more likely, because we have broken market structure, more likely that we break this again. When you do that, poof, heading down, people. That'll be a quick move. And this will line up with everything I've been saying, and a lot of people at Mastering the Markets, etc., have been saying about just watch out here. You're very, very overcooked. on the very, very, very long term. We're talking going back to about 2002, 2003, accumulation phase, public participation phase, excess phase, massive momentum loss. All right, all of that, big momentum, potentially ticking over. Very, very not good. Okay, could we creep up for a little bit longer? But it looks like 2026 is looking pretty bad for tech stocks and the general market, like the S&P 500, etc. And of course, that would mean you'd get out of your things like your Amazon, your Nvidias, and all those. They've been leading the charge, as I showed the other day. Amazon, oof. Okay, so this isn't a place to be. Your place to be at the moment is in your commodities. Your place to be is also in your energy sector as well. And this was the one. Now I'll show you. This was the one that David Bird mentioned here. This is the XLE to NXD. So this is the energy sector. So the American energy sector. So you're talking oil, gas. Part of that will be uranium, that kind of thing. XLE versus the NASDAQ. So you can see energy was very, very undervalued versus tech stocks back in, we're talking the late 90s, okay? And then, of course, you had the dot-com bust in the late 90s, but energy just went crazy versus it, all right? Massively overvalued. Then April of 2020, and now we're here, February of 2026. Looks like it broke up, found support, and potentially breaking back up again. So if you're in tech stocks, if you have friends that are in tech stocks, if you have friends that like Tesla's, I'm buying Tesla and holding it for the next decade, great, that good on you. But you might potentially see a bunch of sideways action. Or, Apple it doesn't go down over time. It goes up over time. Yeah, but do you want to hold Apple, Amazon, Nvidia, Tesla, while it's going sideways for 5-10 years, while something else is absolutely rip-roaring versus it, such as the energy sector? For example, oil, gas, uranium, and all that. So that was basically the gist of this particular post by David Bird. Okay, watch out for your energy sector and also commodities as well. So if I do XLB versus the NDX, let's have a quick look at that. XLB, now this is the US materials sector, which includes like your silver miners and all that kind of stuff, versus NDX. Let's have a quick little look-see. Right? See how massively freaking undervalued the material sector is. Again, silver miners, all that kind of stuff, versus the NASDAQ as well. And I'll show you to you here. We technically haven't broken out on that. You can see here. Crack that whip. There-ish. You can call it there if you want, but I'll just call it there. You are in bullish territory, massive bullish divergence, okay? That's from March of 2020 to the low there. Then you can see here, massive bullish divergence. So not bearish, bullish divergence. I'll get rid of you. I don't want you. I'll get rid of the volume for the moment. Very much bullish divergence. When you start cracking through here, again, the material sector, silver miners, gold miners, blah, blah, blah. If you start cracking through there, do that, bounce off as support, do that. Oof. I think I know the general direction. General direction of the NASDAQ and tech stocks are down. I'm very, very confident we do this. But if you wanted to play it safe, okay, if you got friends in tech stocks, etc., you say, okay, well, don't make a move until there. I think the move is going to happen for sure. We're in a commodity super cycle, etc., but something like that. And then if we take a look at, and this is where I am all about investing in things that help me, help my family in the longer term. I don't care what it is. As I've said before, if crypto turned around here and crypto was looking super bullish versus silver on the longer time frame, and it looked like to me, Bitcoin's going to go, multi-months, multi-years, going to outperform silver, I'm getting rid of all of my silver. I do not care. Stacked precious metals since 2010. I get it. I'm doing what's best for me and my family. So let me give you the reason I say this is, let's take a look at the energy sector. versus the materials sector, XLB. Now, again, this is the American version. Okay, and let's see where we are here. Now, this is interesting. This is, again, oil, energy sector, oil, gas, uranium versus the materials sector, silver miners, gold miners, blah, blah, blah. Cool? We are pretty weighted at the moment towards the energy sector. Now, I'm not saying sell your silver miners, sell your silver, buy energy, buy... No. Hold your precious metals, all that stuff. But if you are potentially considering, I've got extra cash, I think I want to look at diversifying because I'm not all about just buy and hold. I'm happy to have exposure to other sectors. This might be a sector to watch out for. Now, the best time to do it, obviously, was when it was massively low here back in, it's like November of 2020, okay? The energy sector was absolutely getting killed by the material sector, silver miners, gold miners, blah, blah, blah. Good time would have been, obviously, if you had been hawking it down here, the next best time would have been here when you saw the change of market structure on the monthly time frame. That would have been a real big setup because you would have seen, very likely, and yes, we did, bullish divergence from here to here, there to there, right? Then you get up into this area here, right? Resistance broke through and it hasn't looked back. Look at that. Broke through there. Then you're like, ooh, okay, the energy sector is outperforming the materials sector. And then buying, resistance, broke through, tested it, came through, tested as resistance, acted as support, and it's been mainly support. Little test here, sort of faked everyone out here, and now this is where we are. Cool? Acting as support. If you can break through, right, pick it, I don't care what it is. Is it there? Is it there? Whatever it is. You can say, if you want, do that. On this ratio, if you break through around about there at the parity mark, roughly, 1.09, 1.1, that is going to spell the following, which is this. Which is this thing. 1, 2, and if I pop you on 3, 4, 5, if I pop you on the linear scale, where did we find support at? Beautiful support, actually at the top end of the zag zone. Okay, so that's at the 0.382. That's really nice. That's ultra bullish. Again, we talk about very strong support. So very strong support, neutral, weak support. It bounced off strong support. Okay, so 1, 2, this is what likely happens. If you start breaking through that parity kind of mark, then you're looking pretty good for this kind of thing. Ignore where it goes to, ignore all of that, okay? But that kind of move, you're looking very good, okay? Of energy versus materials, consider getting into the energy sector. I do have a bit of energy sector stuff. I just got recently into this here on the Australian Stock Exchange, which is Ampol, Limited, all Ampol, petrol stations, gas stations, all that kind of stuff, engages in the supply of transport fuels, etc. So Ampol service stations, I am in that currently. I think what we're doing here is the following, similar thing. I think that's your 1, that's your 2, bouncing off the 0.382. Then I think we're onwards and upwards from here over time. Have a small position in that. Is that all I have to say? You should buy from Perth Bullion Exchange, perthbullion.com.au, best bullion dealer in all of Australia. 20 or more items in your order, and you get instant. They don't send it straight away same day. Sometimes they do if they have the stock, and you pay in the same day. But what I mean is you get free delivery. Free express delivery, free express sign-on delivery. It's very fully secure, and you don't pay for it. Why? Because you had 20 or more items in your order. You don't have to buy 20 of one thing. You can mix and match as well. As long as you've got 20 or more total items, free shipping from Perth Bullion Exchange, perthbullion.com.au. Just like every bullion dealer, they're going through their own supply shock, okay? Because demand is so huge, but they have things on pre-order. You can back order stuff here for great prices. And here's the thing, they're not jacking up their prices like some other bullion dealers are, some who I may have worked for previously. They're just doing it the more regular premium. So things go quicker, but you're not paying a much, much higher price for them, okay? And if you really want to be guaranteed, see, they've got back order here, the Legendary Warriors series. They've got lots of stuff on back order here, the 1 ounce Buffalo rounds, etc. But if you're looking for something that you really want now rather than later, I would highly recommend, and yes, this is a plug, but I'd highly recommend subscribing to my Silver Investor Club. Why? Well, Perth Bullion Exchange do a private silver special weekly for premium members, and it's stuff that is held back only for Silver Investor Club members. So to give you an example here, I'll give you, that's the classroom. That was the latest hangout on the 13th. And this right here is the current special, and there's still 269 in stock. So if you want to be almost basically guaranteed that you're going to have stock to buy of something, be a premium member of the Silver Investor Club. Okay, so and look at the premiums. They're not jacked up. You're not paying $150 plus for an ounce of silver for like a Perth Mint silver kangaroo, like again some other businesses are doing at the moment. They're the more regular premiums. Cool. And 270 in stock because it's only for the Silver Investor Club members. So I'll put a link somewhere to the Silver Investor Club. You go over here, you watch the video, you do that. There's a free trial as well. And then you got to sign up for the premium to get weekly silver bullion specials. There's the $9 per month. There's the other tiers as well. Join me for personal 1 hour, 2 times personal 1 hour strategy sessions on a topic of your choice. Could be investing, could be some other things. Join that. Cool. Chart requests. Do I have any now? Have I padded enough for time? If not, I'll just get out of here. Fine by me. Fine by me. BHP and WPM. Yes, they did. Signed a big deal. Yes, they did. Correct. By the way, and I did say the other day, if you're into stocks and you do not own BHP, you've got rocks in your head, okay? BHP just did a big deal with that company. I think it was for their silver supply, as far as I'm aware. It was for their copper supply. But anyway, BHP is in an absolute tear, okay? Yes, it's at all-time highs. Here's where people get trapped. They go, oh, something's at a brand new all-time high. So that must mean it's really, really overvalued. It's like, well, no. It could be completely undervalued depending on what the previous price action is. Okay. Now, it could be the thing. Oh, this is funny thing. People buy something at an all-time high because they go, oh, it's at an all-time high. That's amazing. We've made all-time highs onwards and upwards. And then it depends what it did previously. If it's been showing signs of massive weakness, you don't buy at the all-time high. But if something has been showing previous price action to say, well, we've gone in a previous accumulation, public participation, excess phase. We've gone through an accumulation phase. Now we're in the waking up phase, the public participation phase. But look, BHP is at an all-time high. Yeah, but where is it coming from? You're now here, okay? You're in the public participation. You're going to get that. You'll get a pullback. Then you get into the excess phase into, 2045, that kind of thing. BHP is highly, in my opinion, undervalued to what it should be later on down the track. It's Australia's largest now, I think. Is it still, or versus the Commonwealth Australia Bank stock? I think it's still the largest market cap in Australia. It's like, $270 billion. Australia's largest market cap stock. It's got so much more to go over time. So if you just park this in your superannuation, you bought X amount and it's just your buy and hold, because it's such a large market cap, numbers going to go up and down much more slowly, but it's slow and steady wins the race for BHP. You're looking fantastic. So that's like my one hot tip, just buy BHP. And just tell your friends, right? Rather than, you can tell them to do a Mastering the Markets course and they'll be a much better investor. But if they're like, well, I don't have the money, I don't have the time, I couldn't be bothered, but I want to invest in something, tell them silver. Silver will be great over the longer term. But non-silver, BHP, 100%. I'll give you like a 99.99%. Black swans, sure. But no, you're looking really good. That's BHP. You should be buying that. That's not financial advice. I've got a substantial USL position at 50 cents. Oof, good boy. Well done, the big cheese. They've got a potential leading project. Good on you. Yep. I'm back in USL and happy to hold it for the longer term. Wakey, silver handoff to Snakey. This channel taught me to watch the silver to BHP ratio. Good on you. Yep, exactly. Right? Silver versus, this is what you learn. Now, interestingly, not that I'm saying, look at me, I'm so cool, but I've been very much interested in looking at the ratios of one thing to another for a very long time. And let me now share the screen so you can see that. Here. So, but this is what you learn at Mastering the Markets. You learn to check ratios against each other. What is one sector doing versus another sector, etc. How are they performing, and how do you know which thing is better to be in versus another? So, out of interest, this is the silver to BHP ratio. So, as this is going up, physical silver is better to be in versus BHP, for example. So, silver's been the clear winner. Silver got to that $120, and now we're having a bit of a dip, aren't we? But you're probably doing the following. That's probably this. 1, 2, 3, 4-ish. Yeah, maybe here. 5. So silver will probably continue to outperform BHP. But, it's not a bad idea to diversify. But, yeah, it could be wrong. I mean, you could, let's say, for example, let's do it the other way around. BHP versus silver. Yoink. Flip the script. Ooh, see, isn't it interesting when you flip it? I've had this previously drawn in. Yeah, it's very interesting when you look at it the other way, isn't it? Look at all that. Support. We found exact, where did we find exact resistance? Right at the top end there. So as I said before, if you do something like this with BHP, you sneak up, make a higher low, higher than there, and then you do that. So oof, you'll be wanting to take a larger position in BHP versus buying more physical silver. Hold your physical silver, but yeah, that'd be good. But yeah, you could certainly reject here. Is that a rejection? If you start rejecting and start doing this, then yeah, okay, silver is the better play. But at the moment, BHP looks pretty good, doesn't it? I would be absolutely holding that as the number one stock to hold for the longer term if you want slow and steady growth. Okay. Final comments? Any more? Morning, Joe. Pro versus con on ETFs such as Earnum. Oh, yeah, okay, versus individual uranium miners. Fantastic. What a great question, 70 Tony. So, being in a uranium ETF versus uranium miners. Very simple. Well, number one, let's go take a look at the ratio. I think Earnum just had a push-up today when I saw my little alert go off. So this is, it's up 3-point-something% today. Yeah, my little alert went off, but it's broken back down. But that's good. So Earnum is the Beta Shares Global X Uranium ETF. Basically, if you want to buy uranium miners but you don't know which to buy, you buy a basket of them. This is the basket of them. Cool. And this is the one that is listed on the Australian Stock Exchange. Pretty over. I don't need that anymore. We got into there. I can get rid of all of that. Don't need you. Yeah. We went through I'd say that was a 5-wave move. So where we did 1, 2, 3, 4, 5, and then you had the bearish divergence right there. So it looks like we're not out of the woods yet. I just want to say, I'll answer your question, but just in terms of, do I get into uranium yet? We're not quite there yet. You've had that 5-wave move. Now here would have been, really, Joe? Breaking through here would have been the best time to do it? Yes, of course. Here would have been another great time to do it, so you could have captured that move. We're just looking a little bit with this, we could still get something like this, because you get generally you can get an A, B, and then it's some kind of partner move whether it does it lower or whether it does it just kind of snaking sideways. Sure, but you just watch out for there. It's probably still on the cards at this stage. But the question was pros versus cons of buying something like this versus the individual miners. The simple thing is risk versus reward. So it's more risky. It's less risky to be in this versus individual silver miners, but there's less reward if uranium, and I think when uranium starts continuing to go to the absolute moon. Right? So if you buy, say, an individual miner, let's take a look at one of my favorites, which I will be back in very soon, which is right here. This is PEN, PEN. It's actually one of the, it's a small cap. Or is it a micro cap or a small cap? It's 280 million market cap. I think that's a small cap. Could be a nano, but I think it's a small. And the great thing about it is, hey, when it runs hot. And you can get a much larger percentage gain, but the problem is it's much more risky because it's an individual company. What happens if the CEO dies or some kind of scandal is revealed or it turns out they don't have what they thought they had, right? So you're increasing your risk, but there is much more potential reward. So that's the pros and the cons. And what you would want to be tracking or what you would want to be following someone tracking is what that individual miner you're looking at getting into is doing versus that ETF. So, for example, if I went, I'm really interested in getting into Peninsula Energy, but I want to see how it's tracking versus the general uranium market, then you would do that. And that's your ratio, just like we talked about before. So you can see highly, highly undervalued. There's the monthly. And it's technically in a bear market at the moment. So then you go, okay, is there any signs of it waking up potentially? So now what I'm looking for is some bullish divergence. I think I'm going to see from this low to this low, probably a higher low on the relative strength index, but let's find out. Oh, no, maybe I'm wrong on this. No, it technically didn't, at least not on the monthly. Let me see on the weekly. No, we didn't even do it on the weekly. So this is where you really need to see how is it tracking versus just being in the much less risk ETF, okay, against this specific stock PEN. Well, technically, it's kind of directionally aligned divergence, but you can't say that it's bullish divergence because technically we did make a lower low. Yeah, you could cheat it and say that's pretty close enough for jazz. I guess so. On the monthly, it's pretty close. So maybe I'm just splitting hairs, but that's, kind of equal-ish, I guess, but that's definitely a lower low. But what you would be thinking to yourself, what you'd be saying to yourself is, okay, I won't probably get into this until it starts making a bullish change of market structure versus the ETF, because you may as well just be in the ETF, right? Why buy an individual stock if it's not outperforming the S&P 500? Why be in Tesla if Tesla isn't outperforming the NASDAQ in general? Just less risk. Buy the less risk thing. So you got to see, why buy an altcoin if it's not outperforming Bitcoin? Just buy Bitcoin. So then what you would want to see is this. Great, we've got a potential, if that forms a lower high, let me start that again. If that performs a higher low and then does that, great. So then you're making a higher low, a higher high. That would be the absolute, you'd be getting in at the absolute bottom of, say, Peninsula Energy versus that. So then that's what you'd be watching for. No point being in it unless it's outperforming. So to give you an example, DYL, let's see what that is. DYL is Australia's, I think, largest uranium producer. Let's see, Ernum. That's nope, I don't want that one. I want the Australian one, Ernum. So let's check DYL. Now here's the big difference. DYL has been outperforming for a while, actually. So for a good, this is the monthly time frame, 1, 2, 3, 4 months basically, DYL, Deep Yellow Limited, has been outperforming the uranium ETF. So it depends on the one you're looking at. Okay, if I go Boss Energy, I don't think Boss Energy is Ernum. No, see, now this is another thing. Look at Boss Energy, absolutely getting completely shat on. However, look at this. Could we be forming a nice little bottom here? So Boss Energy might be one to look at versus, but there's not total bear market at the moment. Nothing really saying there's some potential bullish divergence. Okay, so this is why ratio watching is a really good thing to do. Okay, you've got some potential bullishness happening here, but you can't say until you get the following, something like that. And that's when you go, oh, okay, we formed a nice little bottom here. But yeah, it's better to be in the ETF versus Boss Energy, but DYL might be a different story. So that's why you do ratio stuff. Cool. Hopefully that explained it. South 32, yes. Oh, yes, S32, good. G'day, Joe. I hope you're doing well, mate. Hello, Trader next door. Good to see you, friend. Great to have you on the channel. Great to see you. I'd love to do an interview with you. Let's jump on the channel. I had David Bird on a couple of weeks ago. Yeah, pop on, man. Let's chat. So send me an email, joe.main@masteringthemarkets.com, or just send me a Facebook message because you're on Facebook. Good time to buy silver? Well, let's go back quickly. I am here longer than I thought I would be, and my voice is getting a little croaky. All right, the market's opened for silver, and we are up a little bit. We're up, we basically haven't moved. But here's the silver market. We're green for the day so far. Cool. As I was saying before, I think we're looking good from here, but you just have to look at the other side of it as well. So yeah, up for the day. I think we do this. Excuse me. There's another reason why I think we do this. So let me show you the weekly. No, I'll show you the daily. Get rid of that. This might be the final thing we do, just having a quick final look at silver for the day. Go away, Joe. Nope. Yep. This is what I'm looking at the moment, and this is what I favor at the moment. I favor this kind of move. Could we tick over here and head down into the 50-somethings? Absolutely. Would be one of the best buying opportunities in the history of the world if that were to happen. But I favor this more likely while we're above that. I said before at the start of the show, while we're above around about 71, 72 US dollars, I favor that move rather than the down move. That could still happen, okay? Interestingly, remember I showed you from around about here, that's showing to me some hidden bullish divergence. So here, see here to here, there to there. Now, I could be wrong on this, but there to there, if you have a look at there to there, that's a lower low. Now, I might be wrong in my interpretation of this, so bear that in mind. But I see potential hidden bullish divergence there. I could be wrong on that. Okay, so do not quote me on it. But yeah, I just think we do that. And if we start ticking below that 70 to 72, then I'd say, oh, okay, looks like we might be. If we tick over here and we start cracking through there, then we might be going, oh, okay, looks like we're going to head down into that kind of 50s kind of area. And what would that be doing? Oh, well, all that's doing, pretty simply, is heading back to the previous all-time high from 1980 and 2011, and something breaks out and it retests the previous support. Okay, cool. Par for course, man. 1, 2, 3, 4, a deep wave 4, and then you 5 into your 2030, 2032. So from around about here is good, anywhere down into the 50s. I'd start getting concerned if we started, just so everybody knows, and this is very obvious, but just so everyone knows, if you start getting below right there, $29 and something, that's the death knell. Now, many of you would already be very underwater at that stage, I'd imagine. But just from an Elliott wave structure, what that means is the golden rule is wave 4 can never go below the top of wave 1. That invalidates it. Okay, so yeah, you can do this 1, 2, 3, all the way down into here. But if it breaks 1 cent below there, then that's invalidated. Okay, and then you got something else going on. Okay, I'm not saying that's happening. I'm just giving you the rules. But buying around here, not a bad risk to reward, Jake. Check out the ASL chart. It's formed a massive round base. I guess this is chart request season. A massive round base on the... What time frame are we? A massive round base. ASL, which is Andean Silver Limited. Don't know what you mean. It depends on the time frame you're talking about there, my friend. So I will go back here. And we'll take some... When is silver coming out of the correction phase? Might be now. G'day, Joe. Hi, gang. What month is the best month to buy? Great. What months is the best month to buy silver in this year? That would be... I'll show you. Silver... I have it bookmarked, Joe. Silver seasonality. Charts. If it does it for me. Yeah, there we go. Here is silver seasonality chart. I'll get rid of that for a second. That's me over there. Silver seasonality tends to do, and this is based on 10-year-old information. So it was from 1986 to 2016. It was the 30-year average of what silver did during a year. All right, it's price action. Generally good from around about the start of the year into around about March, April. Okay, April-ish, sell in May and go away. From around about, it's out there. From around about May, roughly, sell in May and go away into around about your June, July kind of time frame down, but then it's just kind of snaking down. So from around about October-ish, from seasonality perspective, September-ish, October-ish is generally another good month of the year to buy silver. It might be, lower. Having said that, this is an average. So this year, 2026, could be completely different, okay? But I like the sell in May, go away kind of thing. So that kind of April-ish time frame for a high, just when the low, the next month is where it's the best time to buy as a low. Tradition would say September, October, but, June, it could be there because, you could do June and then onwards and upwards from there. So I want that and I want that and I wanted to put myself back over there. Okay, do we think gold is a good buy this year? Towards the end of the year, I think. Again, that's sort of September, October, based on the seasonality. But yeah, where we're going in the shorter to longer term, looking very good for gold and silver as well. I got to get out of here, people, I think, because I've got stuff to do. Log. What happened on my log? SHL crossed up. That crossed up. No, nothing else to report from the markets. Ladies and gentlemen, you have watched Good Morning Stackers with me, Joe Main, going out live on X and on YouTube and on Facebook. And if you want to learn more about a Mastering the Markets course, there's a short course and a year-long course. Send me an email, joe.main@masteringthemarkets.com. The priority access waitlist is open today, as in enrollment's open today for those people on the priority list. Around about 70 to 80% of the spots get filled from that priority list. If you want to be on it, I'll put you on it. That's fine. And so send me an email and learn more about the courses. And then they open to the public the following week. And then once they're gone, and we're capping them as well. So Mastering the Markets is only going to take a certain cap of students. And if you want to find out more, email me. You can also go to masteringthemarkets.com. and click on the courses section at the top left there and find out about their courses, but then send me an email and then I'll onboard you. I'll get you in, guys. Finally, we will do a synchronized slurp at the end of the show. Grab your tasty beverage, whatever it is, because you have watched.
Good morning, Stack.
Oh yeah, we're feeling fine.
Good morning.
This show's got it all, hasn't it?
It's podcast time.
Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do the
Synchronized slurp. Now we're on the move.
3, 2, 1, go.
Good morning, Stack.
Oh yeah.
All right, got to go to work, people. Got students to sign up. Stay safe, stay informed, keep stacking whatever you're stacking, and I will speak to you soon. Have a great day.